Today, Bitcoin sinks below $70,000 to end the week. MicroStrategy plans its second convertible note offering in less than 10 days, and Kraken's head of strategy breaks down why crypto prices are falling after notching new records in recent weeks. Bitcoin and Ether both ending the week in the red. As of noon Eastern, Bitcoin dropped nearly 4% to the $68,000 level, and Ether fell more than 4% to just under $3,700. Solana, however, jumped more than 8% to $181. Now, for the week, Bitcoin dropped nearly 2% and Ether fell more than 6.5%, even with the network's latest upgrade, Dencun, being finalized this week. Now, that update is meant to help with scalability. But a bright spot is Solana, soaring more than 23% as of noon. Okay, let's talk about today's top stories. MicroStrategy is planning its second convertible debt offering this month to buy more Bitcoin. After markets closed on Wednesday, MicroStrategy announced it was offering $500 million in convertible notes due in 2031 to institutional investors. Today, MicroStrategy announced the pricing of its offering, $525 million. Now the goal? Well, buy more Bitcoin to increase exposure. Convertible notes can be exchanged for shares when the stock hits a predetermined level and gives companies an option to raise money at lower interest rates than regular bonds. This came just 9 days after the firm announced a $600 million private offering in convertible notes. Earlier this week, MicroStrategy's executive chair Michael Saylor said on X that the company bought another 12,000 Bitcoin, taking its total holdings to 205,000. Next, two Senate Democrats are urging the SEC to block any further crypto exchange-traded products. Senators Jack Reed of Rhode Island and LaFonza Butler of California sent a letter to SEC Chair Gary Gensler earlier this week, arguing that retail investors would face, quote, enormous risks from ETPs, referencing thinly traded cryptocurrencies or cryptocurrencies whose prices are especially susceptible to pump and dump or other fraudulent schemes. The senators also pointed to a FINRA survey, which disclosed that 70% of brokers' communications with retail investors regarding crypto violated fair disclosure rules, which the senators say raise, quote, significant concerns that brokers and advisors might provide incomplete or deceptive information about Bitcoin ETPs to retail investors. The SEC approved spot Bitcoin ETFs in the US back in January and are currently reviewing applications for spot Ether ETFs. The SEC is due to give decisions on those applications from asset managers, including BlackRock, VanEck, and Grayscale, beginning May 23rd. And finally, a UK judge has decided that Australian computer scientist Craig Wright is not the anonymous inventor of Bitcoin. Wright claimed he was the author of the 2008 white paper that introduced the groundwork for the cryptocurrency. That paper was written under a pseudonym, Satoshi Nakamoto. Well, the Jack Dorsey-backed Crypto Open Patent Alliance took Wright to court to prevent him from making that claim and suing Bitcoin devs, and a UK judge agreed. Reuters reported that at the end of closing arguments, the judge said the evidence that he was not Satoshi was, quote, overwhelming, and that he was in fact not the author of the Bitcoin white paper. All right, back to the markets for our main story. Crypto World's Jordan Smith spoke with Kraken's head of strategy, Tomas Profumo, about what's behind Bitcoin's move lower after the cryptocurrency has been hitting new records the past.
All right, Tomas, thank you so much for being here. Really, I think at a perfect time to talk about markets directly. Bitcoin falling overnight back to the $68,000 level as we're talking, and it's about 7% lower from its recent all-time high. And people we've spoken to on Crypto World have been telling us for some time to prepare for a pullback of some kind. So is this just Bitcoin falling back to something that's more sustainable? What's the driving factor here in your opinion for the sell-off that we're having?
Sure. So firstly, thanks for having me on. But when I think about this recent pullback, obviously consolidations in the face of bull runs tend to happen. I like to contextualize this kind of movements. Bitcoin volatility is still fairly low compared to historical standards when it comes to bull runs. So we're right now tracking between 60 to 70% annualized vol. That compares to triple digits when you get into some of these really crazy movements historically. And going back to that conversation around the all-time high, you really have to contextualize this. So even though people get excited about Bitcoin exceeding $70,000, it's really still $1 trillion market capitalization asset. And in the broader context, it's a sliver of overall financial asset capitalization. So equities, fixed income, even fiat currencies, hundreds of trillions of dollars. And so I think right now the focus should always be looking forward. And for me, it's a story around adoption. And if you have conviction like I do in this industry, we see on the order of 500 million to a billion people entering crypto. And so that's really what's going to drive that long-term trend of growth in the value of crypto in general.
Yeah, let's talk about adoption long term. I mean, we've seen this huge rally this year. It's up, as you said, above 70K as a new all-time high. And I feel like we haven't really seen any new addresses come online in that time. We haven't seen new users really come into the crypto market. In terms of adoption, what needs to change there to, yes, reach new all-time highs, but how do you expect adoption to change and to get more people into Bitcoin?
Sure. So let's put some data behind it and some, again, context. When I think about adoption, about maybe a little less than 10% of the global population has adopted crypto in some format as of last year, per a lot of market research. And when you think about empirical studies of technological disruptions and the adoption of those technologies, you tend to hit this tipping point. They call it the chasm, around 13 to 15%. And that's when you start to see that really a big acceleration along the S curve in adoption itself. And so we're really close to that tipping point if you think about it. And for me, that's what I'm most focused on in the next, call it 3 to 5 years. But let's look where we were even just 4 years ago at the last halving. Solana had just barely launched only a few months prior. EIP 1559 on Ethereum wasn't a thing. NFTs weren't a big deal. Staking was nascent. Institutions were only then at the very earliest stages of talking about Bitcoin as an inflation hedge. And since that time, total central bank balance sheets have grown 30%. Inflation has gone from, call it 1 to 2% in OECD countries to 3 to 4%. And then, of course, interest rates going from slightly negative to maybe 2%, all the way up to 5.5% today. So it's a completely different world when I think about 4 years ago. And what that means for people and adoption is you have more and more development, you have better, more intuitive and higher utility experiences that are going to cater to that early majority that's looking for something familiar and useful to them. And so that's when you start to really see that acceleration and that 500 million, billion plus people that I'm personally looking forward to in the next 3 to 5 years.
You mentioned the magic word, the halving, just now. And we keep saying it over and over again on Crypto World, and it really is just a few weeks away. In the past, it's been a huge catalyst for Bitcoin, but I'm curious if you feel that it's going to have the same impact on price this time around, or do you expect it to have less of an impact on this bull cycle?
When I think about this halving specifically, for me, I actually think it's perhaps the most symbolic in Bitcoin's history and possibly ever, especially in this stage of adoption. And what I mean by that is, like I said before, we're still very early stages on adoption rates. You really have to think about that acceleration. And so this timing is particularly important. And when I think about this halving, it's the first time that annual growth in Bitcoin supply is going to fall below 1%. So it's going to be around 0.8% to start. And 94% of all Bitcoins that will ever exist will have been mined by April of this year. And so think about institutions or individuals who are looking at Bitcoin as sound money. That pitch around the limited supply, only 6% left to create, as well as that really limited supply growth, less than 1% per year. You don't get that in addition to the technological advantages that Bitcoin has to offer on the demand side. So it makes for a really crisp messaging that's going to really, I think, play a role in that acceleration in the next 3 to 5 years.
The other catalyst we're talking about this year alongside the halving is obviously the ETFs. Do you expect them to continue to be a major driving factor for Bitcoin this year? And I'm also curious, just in terms of Kraken's strategy, if you see them as competitive or as complementary to your business.
I think it does play a big role. You know, you had a lot of locked up capital in the US that couldn't participate in getting Bitcoin exposure. And now you're starting to see this narrative play out in other countries where they're already looking at potentially launching their own exchange traded products if they haven't already on Bitcoin. So I do think there's going to be an ongoing trend of the role of exchange traded products. Now, how does it impact Kraken? So I see this on two fronts in particular. So direct impacts. Kraken has ownership of CF Benchmarks, which is actually the largest index provider for not just regulated derivatives, but also the US Bitcoin ETFs themselves. And so we do play a role in the reference and pricing of these ETFs for comparison and benchmarking purposes. And because we are included in that as a constituent in that pricing, we are also a liquidity venue for Bitcoin itself within the context of the ETFs. And so a lot of that sourcing of Bitcoin that happens at the ETF level, at the end of the day, has to go to exchanges like Kraken to get that Bitcoin into their treasury. And so Kraken is going to play a role directly. As far as trading itself and whether it's complementary or competitive, I think it's more on the complementary side, because at the end of the day, when you think about the different assets or asset managers that are playing in that space in the ETF market, in a lot of cases, they're prohibited from even touching spot Bitcoin itself. And so I think that it's going to be complementary in nature. It's going to grow liquidity. It's going to grow volume. It's really good for Bitcoin.
Okay, that's all for Crypto World this week. We'll be back again on Monday. We'll see you then.